Andrew Allred with FourBridges Capital Advisors here with TJ Gaul with North Branch Capital. Today we get to talk a little bit about what drives value for residential and commercial services businesses, which in plain speak means what makes a business more valuable. So TJ, thanks for talking to me.
Yeah, thanks for having me, Andrew. We love the services landscape, regional service businesses that, operate in large multi-billion end markets where the professional players and good teams really win. And you'll hear that from me a lot, right? It's all about the team within these service businesses and the systems they have in place and the infrastructure that, they've built to really prevail over some of the less sophisticated players.
Yeah, yeah, no, it makes sense. And I know you guys obviously have the tree care platform we got to work together on. You've done roofing, a couple different home services investments, I think. So maybe, yeah, kind of zooming in on whether it's residential or commercial services. Maybe a good starting point would be to talk through if you kind of looked at that bucket again, whether it's roofing or tree care, landscaping, et cetera. I think folks in our seat and probably your seat as well, you hear kind of the good buzzwords, with like recurring revenue, route density, and then you hear kind of the bad buzzwords like new construction or things like that. So what would you say maybe to a business owner who's growing his or her business? What's really important from somebody that's sitting in your seat and you're looking at a business? What's really driving value?
Yeah, the first thing, and I'll just give you an idea of how an investor looks at a service business, right? And what makes it attractive, which I think will give some good insights to entrepreneurs. But the number one thing, the first thing we look at is market, the how fragmented it is, how big it is. Typically in service businesses, right, we like to invest in end markets that are $10 billion, because when we get in and we partner with small companies that are really family owned or entrepreneurially run, that are typically 10 to 30 million in revenue. But we love to invest in on markets that are 10 to 50 billion in size, right? Because when we grow a $20 million revenue business to 100 million, we want the next investor to see a pathway from growing that $100 million revenue business to 300-400. So that's really important from an investor's mindset. And typically, like all these service businesses we're going to talk about, they meet that profile. The second thing, and we can really sniff this out, during the initial call with the entrepreneur, is the team, right? We ask questions around what does your team look like? Who's really leading the sales approach? What's the depth of your team? Is there a CFO? Is there a director of HR? Do you have a sales manager in place, right? Really having all the key functional areas addressed and a deep team is really important to us. And along with that goes, what's the culture of the business? The culture of the business in these service businesses really yields a good customer experience, and you can kind of see a glimpse of that in Google reviews, right? Especially for these residential service businesses. But businesses or employees that wake up every day that love coming to work, those businesses have a great culture, right? And in return, deliver a great customer experience. So good culture and depth of team is super important. Just having, the entrepreneur wearing all the hats, is tough for us because we'll have to eventually add a lot of costs to build out the infrastructure to have the ability for that business to grow to 30, 40, 50 million in revenue. Systems, a lot of service businesses, they have QuickBooks, right? They don't have a real operating platform. And, that's really important to get to, any business can grow to 3-4 million in revenue without a true operating system, but be able to scale from 10 to 20 to 30 million revenue and really have the data to make good decisions in order to do that. That's really important. So also when we're looking at a new platform opportunity, having that system in place for when we bring in various add-ons, having that good foundational system is very important. Also, and typically most services businesses have this, but diversity of revenue and repeatability of revenue is really important. So, if a company has a 50% customer, that's going to be a challenging, right? That's going to be a challenging situation. If that customer leaves, obviously that makes a huge impact to the business. But the profiles we like, and TreeWorks was a perfect example, the one we worked on, Andrew. They service 2,500 customers a year. Their average ticket was around $2,000. They performed really, really well in any economic cycle. I think about a third, or maybe it was like 40 or 50% of the business was repeat business. So, in any economic cycle with that diverse of a revenue stream, there's going to be demand. And we look at the service offering, as discretionary and non-discretionary. In that tree example, if a tree is about to fall on your house, you're going to do something, right? So,
Right.
if someone has, most of their customers, they do annual pruning just to avoid, their property looking like a disaster. So that the tree care businesses are highly non-discretionary, and it's repeatable revenue. A big
Yeah.
indicator of the value to the customer that these service businesses bring to us is gross margins, right? A lot of people talk about EBITDA margins, but EBITDA margins are a result of the gross margins. So, what we typically look for in a really well-run service business, and it obviously depends on the industry, is 40% plus gross margins. And that typically yields at least 15% EBITDA if the business is run efficiently. And then, the final thing is just cash flow dynamics, net working capital dynamics. Do customers pay on time? Do you have the ability to generate cash flow consistently? And especially in a private equity situation, there's typically debt on the business, which needs to be, you need to make sure you can pay the banks in those situations.
Yeah, no, that's a lot of good stuff. Maybe going back to the management team, what as you look at owners, what's kind of if it's a spectrum of, hey, this owner, gosh, they've already built up a great team. They're not even in the office, maybe once a month. That's kind of one. And then the other end of the spectrum is, geez, pick a HVAC, roofing, whatever business, and the owners, well, they're showing up at customers' houses, they're bidding, their spouse is doing the accounting. I mean, they haven't outsourced any of the, where on that spectrum from your seat do you start to say, okay, I think we've really built a team here?
Yeah, so we actually just signed an LOI with a new services business, and they're exactly what we want to see. And so it's two brothers. I won't tell the industry right now due to confidentiality, but they're focused on the strategic growth of the business. They're really not involved heavily in the day-to-day. They're thinking more high level. They're thinking about opening new green fields for the business, talking to different add-on acquisitions. And that's a perfect situation for us, right? Because they have a team under them. They have a call center manager, they have head of recruiting. They scale up. It's a seasonal business. They scale up in the summer, so they need to add a lot of people. They have a regional manager, and then they have GMs at each location. So they have the perfect infrastructure to partner with, because the two owners are really thinking about what we are going to think about, right? And then we can collaborate with them. Their business is growing tremendously. They were up 55% in March year over year, but they're not heavily involved in the day to day, right? They're thinking
Right.
about how can we continue this growth, which that's the ideal situation, you know. Um, you know, investors will still, for a business that has been around in a region for a long time, who has a lot of repeat business, who has really good Google reviews, and who has just a good brand name in the community. Like if the owner is doing everything, that's still a business we would invest in. But we're gonna have to make some investments into that business in case something happened to that owner, right? It presents more risk to any investor. So and
And
then
risk means lower valuation probably.
yeah,
All else equal,
exactly.
right?
Absolutely that. And then we're gonna have to add more costs to the business to really
Right.
make that a scalable business going forward. So so yeah, setting up the infrastructure to double your business organically and just show that sustained growth is super important to investors.
Yeah, no, that makes sense. So there, for the business owner out there, hey, there could be a deal out there if I'm doing everything, but in the eyes of an investor, that I haven't de-risked that situation yet. I could add value if let's get a controller or a CFO and your call center example. So building the team drives value, and then maybe to pivot to your other point, which I think is a really good one. If you kind of look at what should a business owner be thinking, and maybe what levers you guys try to pull once you're in an investment to say, okay, here's my revenue mix. How do I make it more reoccurring? We take maybe a tree care or a roofing example of, hey, I'm I'm doing removal in the tree care world, or I'm doing replacement in the roofing world. How can I take that and make that revenue more resilient and try to increase my value?
Yeah, yeah. I'll touch on roofing and tree care, right? So a lot of the tree care businesses we look at and talk to, right? They're heavy removal, right? And what the original platform that we invested in, Butte Tree, they did a really good job of diversifying their business. So they're coming to the homeowner at least one, two, three times a year. And they did that through getting people on, a pruning plan. So pruning in the spring and in the fall, and also a plant healthcare plan. So plant healthcare is essentially like aerating roots for a tree, infusing chemicals in the tree to extend the life of a tree. So it basically is, going to the doctor for a tree two times a year. But
Right.
then that also generates other business. So like if they're going for a plant healthcare visit, they'll point out to the homeowner, hey, you have this limb that's going to fall on your roof, which will create roof damage, right? So can we take that down? And they'll charge them an extra 300-400 bucks, whatever it is, right? So getting to the customer, the home in residential services, as much as you can during the year is important to just maintain the stickiness of that customer, and also it allows just the business to have more opportunities, right? So that's one. On the roofing example, the roofing business that we created, it was about 80% roofing and 20% was siding and windows. So and this gets to your kind of discretionary, non-discretionary comment. Roofing is pretty non-discretionary, right? Like if your roof's leaking, you can band-aid it for a little bit, but you can't put it off for 3 years or it could create significant damage to your house.
Right.
That siding and windows is a little bit different. Windows is in the middle because windows, like in our old house, right? We had to when it was February out and it was 20 below, right? Our energy bill was super high. You kind of have to eventually fix that.
Right.
But siding, if you don't want to spend money on siding, your house isn't going to look great, but you can put that off for years. So, but in roofing in particular, we would partner with roofing centric businesses and grow siding and windows. So that was a growth avenue, but we would also try to put together, maintenance plans where we would come out, check the gutters, right, twice a year. We would install gutter guards, things like that. And that allows us to inspect the roof, right? And generate more business. So the more touch points, the more service offerings you can provide for customers, the better. So
More touch points, more boots on the ground around the home is a good thing. What about maybe maybe kind of sticking with that, but shifting gears almost if you're the business owner thinking about, hey, or maybe what would you say to them? Hey, what can I do over the next 12 to 24 months to to implement some of those changes to make my business more valuable? What levers can the business owner pull to do any of the things like we're talking about? Hey, how do I extract myself or build a team around me? How do I kind of diversify my revenue or have more repeat revenue? How do I mean, you mentioned, some of the maintenance programs.
yeah,
What are some kind of this takes me 2 or 3 years to do it kind of things that a business owner might consider working on?
yeah. So the one thing that we see from a lot of our partners, right? They were in some of these CEO groups, Vistage, right? Basically, it's monthly meetings with other very successful business owners in other industries and similar industries, and a lot of good brainstorming and idea sharing comes from that. And you're talking to entrepreneurs who have been through sale processes, right? Who have positioned their businesses for that. But I always find, and just from talking to, CEOs that I'm close with, they find that super valuable because, these other entrepreneurs can help them think through different growth levers, right? So, but if I were an entrepreneur, right, and in any business, even if I was starting a business, right, I would want to understand every growth lever and also understand what makes my business, most valuable. So we talked about this recurring, dynamic of revenue. How diverse and how repeatable is it? That's just really important. So thinking through how I can touch the customer more to position the business better, for that repeat nature. When we're just initially assessing a business, the big things that we look for, initially are customer concentration. So that goes to the diversity of revenue.
So what's the magic number there? Like if you guys see north of 20% of revenue, or where how do you think about that?
Yeah, the first business we ever invested in had a 40% customer, right? But they were doing something really unique. So it really depends on the situation, right? You need to understand if there is customer concentration, the dynamic there. But yeah, I would say 15-20%, we want to really understand, dig into it. If it's north of 20-25%, that's probably going to detract a little value out of the business. Gross margin is, again, I've said this before, it's super important to us. We typically invest in businesses that are 40% plus. We have one business that has 80% gross margins, right? So if it's below 30%, we question the industry and maybe the value that the company brings to its customers. So that's one thing. The ticket prices are really important. If 5 to 10 jobs make or break a year, right? That's probably not gonna be an opportunity for us. Those are really the main things. If we can check the box on all of those 3 or 4 things, we'll dig into the business and at the end of the day, it really there's boxes we need to check, and then it all goes back to the team, right?
Right.
So, um, we've had one bad partnership in the history of North Branch, and we didn't spend enough time with that entrepreneur, and we didn't understand his background. So we take our time. We like to meet with the partners, the entrepreneurs that we're going to partner with 4, 5, 6 times, get a beer with them, go out to dinner with them. We love meeting their significant others, right? And maybe some of their family members so we can understand, who they surround themselves with.
What separates a, kind of maybe average business that you see in that space versus a really, hey, that's a really premium quality business.
Yeah, listen, it all goes back to the team and the infrastructure that they put in place because a lot of these service blue collar businesses just don't have the infrastructure to scale. So as investors, we look at opportunities. The only way we do well for our investors is if we can grow the businesses. And we look to double or triple businesses organically. So the team is just the utmost importance and the depth of the team. Systems in the initial platform acquisition is very important. One of the reasons that I'll take that roofing example.
Mhm.
Um, we were one of the first to get into like retail roofing, and we were questioning like, not a lot of people were looking at it, right? But the more we learned about, this guy, Josh Sparks, the business he built, the team he had, Josh was another one of those guys who he was involved more on the strategic growth of the business. He had a team
Mhm.
completely running the day to day. But the reason he could kind of step out of the business and focus on bigger initiatives is because of the system he built, and he could just, open up his iPhone and, you know, diagnose the business, a couple times a day to see how everyone was performing from a sales standpoint, from a production standpoint, from a marketing standpoint, things like that. So having really good data is extremely important, and that's one of the things that separates, a good business from a great business. So team, systems, and then I would say also, there's different like schools of thought on sales approach, right? Um, you see a lot of, successful home services businesses having a very and commercial services business have a very aggressive sales approach where it's like you know
Canvassers, the door
yeah,
knockers.
yeah, exactly. It's a
Yeah.
one call close, right? You have to sell
Yeah.
right away. We're turned off, and we found that the really successful businesses are the trusted home advisors or the trusted, business advisors that really look out for their customers.
Mm.
So having a thoughtful sales approach is really important, and you can really see that in the close ratios. These aggressive businesses, they have more at bats, but their win rates are a lot lower. So
Yeah.
having a 50% plus win rate is really good in these blue collar service businesses.
No, makes sense. Um, people seems to be the common theme. So build a good team,
People
business
is,
owners.
yeah, people are the drivers of these businesses. People, culture, working together to make stuff happen for the customers. It's the most important thing, and that's what separates the great from the good.
No, it is it's interesting you say that. I think a lot of the times folks that we're working with, we start talking about going through a process and we're going to create all these materials and ultimately start calling all these potential buyers. And then, oh my gosh, you're going to call private equity firms and well, they're just going to fire all of our people and change all of our systems. And it's like, that's the opposite of everything you just said. You cannot do these jobs without the right people.
Absolutely,
So I think
absolutely.
it's a good message.